Securities and Exchange Commission. I would also like to welcome our panelist, Mr. Bijon Islam, co-founder and CEO of LightCastle Partners, Mr. Ahmed Yusuf, advisory lead at Bangladesh Angels, Ms. Sharawat Islam, CFA, managing director, Truvalu. So over to you, Mr. Irat Kausar. Thank you very much.
Excellent. It's a very heartwarming crowd to look into uh, because the topic we are going to discuss about is a very critical one. What is the headway for impact investors in Bangladesh? Why it is critical? Because in Bangladesh, it is always seeing is believing. But in the scene of impact investment, we are yet to see the investors perform heavily. And that is where the entire discussion comes. That is where the entire interest is. So, without beating around the bush, I would love to address the point which comes up every time as a debate and discussion, that is the policy in Bangladesh favorable enough for the investors? Is the policy or the regulation, are they ready to accommodate impact investment in Bangladesh? So with those questions in mind, I would love to introduce you all to our Honorable Commissioner of Bangladesh Security Exchange Commission, Dr. Samsuddin. He is actually the right person we have here to give a very good picture about how regulation and the policy is creating a solid platform for impact investment in Bangladesh. Sir, would love to hear something from you there.
Thank you very much. Very good afternoon to all of you. We are ready. Bangladesh is fully ready with all the kind of things that are required for facilitating investment in the impact finance dimension. For example, if you start from the capital market perspective, we would say that we have the rules and regulations ready for that. For example, we have the debt securities rule, which provides a lot of opportunities to which this kind of thing can be designed. In fact, we have a schedule through which we can see that a list is provided for impact financing, and it's open. You can actually extend it. It can go beyond what is mentioned there. And there are financial incentive as well. For example, a bond usually requires certain fees and charges, and for impact-related bonds, it will be significantly lower. So it is also facilitating. We also have the Alternative Trading Board, which is now listing anyone who is not from the traditional perspective and can come forward. We are open to any other ideas. We have actually, in the meantime, approved some of these venture capital initiatives, and we also promote private equities in cases, and we are having consultation with the angel investors so that they can also facilitate this system. This is a very small discussion from the perspective of what we are doing, but nationally, at the larger level, there are plenty of wonderful policies that we already have. For example, this Mujib Climate Prosperity Plan. This is a wonderful plan, actually, magnificent plan. It gives detail of how to have impact financing possible, how we can do, for example, climate-related issues addressed. And it mentions how finances will be available, and it emphasizes particularly on the private sector. In fact, when it talks about financing, it talks about 47.5% of the financing requests to be emanating from the private sector. So there is a major push from the government policy through which private sector can come forward and can do. There are many other greater policies. For example, the National Action Plan. We also have a National Advisory Board at the moment, which is providing guidance in how to improve further into impact issues. Government has detailed interest. For example, I can cite the recent initiative of the IMF, which is providing $1.4 billion, precisely $1.33 billion, RSF, Resilient and Sustainable Finance, and it is focusing on impact financing. And the government is really working towards that, how to better manage that and do that. So large and small, there are macro and micro financing issues and policies which are facilitated. Not only the Security Exchange Commission, but also like Bangladesh Bank has a guideline to which you can come and see the opportunities there. So its policies are sufficiently there. Now it is time for all stakeholders, especially in this case the startup. They have a role to play in this case. For example, we are a very small contributor to the pollution, CO2 pollution. Globally it's about 37 trillion metric ton, and we do about 300 million metric tons. So trillion and million. And whatever we are doing, it's coming from the, mostly about 75% of it's coming from the agricultural sector. And we have to see how startups can do this ectech thing as an example. How, for example, solar energies can facilitate this irrigation that is very important for this country, for the food sustainability and poverty reduction and all this kind of thing. So there are opportunities there which requires to be picked up by these stakeholders or investors or those who are looking for investment to cite and take the advantage of the given policy that we have. And government is of course ready to change any policy requirement towards facilitating further accommodation of all the parties. Thank you.
Thank you. Thank you. That is absolutely true, that the government is always ready to support with policies, because here I would definitely like to mention, because the stamp duty for any investment, foreign investment in Bangladesh was 2%, but that's quite a lot. So if a $100 million fund is coming in, the stamp duty is going to cost you $2 million. But after discussing this with the regulatory authority, they have lowered it to 0.02%. That's just the cost of managing the works. So that's actually a huge step from the government side, lowering the stamp duty to 0.02%. But there has been a new addition as well, that if anyone invests through an impact fund, the capital gain tax is going to be 0. That's actually a very big step taken by the government. I must thank you, the way the government is mobilizing things for the creating a better environment for impact investment. But from your point as well, I would like to move on to Bijon Bhai, that Sir has mentioned about the climate actions. Sir has mentioned about agrotech and other sectors where we need to look on, where the startup needs to find a way to produce solutions. We have been working for quite some time in this impact investment and impact startup development scene. You have been working ferociously with Biniyog Briddhi. What would be your suggestion, that what are the sectors where the investors might look into, or the startups should work to reap the benefits of impact investment?
Thank you, Irad. Very interesting question, right? I will answer it in two perspectives. One is thematic, and then one possibly more on the sector-specific answers as well, right? On the thematic side, I think Bangladesh has critical problems to solve. They have to solve problems like financial inclusion. They have to solve problems like gender inclusion, right? They have to solve problems like climate. They have to solve problems like access to technology, right? And I think these are thematic areas that cuts across multiple sectors. For example, You can solve financial inclusion in agriculture. You can solve financial inclusion for RMG workers. You can solve financial inclusion in different sectors like wash, right? So I think thematically, those are some of the broad themes that we're coming up. And if you look at sector specific, I think we also have to solve big problems in like food and agriculture, right? We also have to solve, big problem in, clean water systems, right? We have to solve big problems in healthcare, right? So I think those are some of the, we have to solve big problems in education, right? So I think both from a thematic perspective and, sector perspective, those would be few of the sectors that I can think about. Lastly, we also talk to investors and what are some of the sectors they're looking at. And there's a lot of overlap. Some of the sectors that we think there's a lot of overlap are sectors like financial inclusion, sectors like clean energy, sectors like agriculture, and some emerging sectors like affordable housing, right? So I think, yes, I think there are plenty of opportunities for entrepreneurs to solve critical problems and also scale not only the impact, but their business as well. Thank you.
Right. Thank you. I will move on to Zawad now, as you're representing the Angel Network. And Angel Network is the first step for access to financing for any startup, or I would rather say of any commercial dream. So from your experience for working in Bangladesh with the Angel Network for quite some years, what do you see as a challenge, or does the angels face any challenges to adopting the concept of impact investment?
Thanks, Yurad bhai. I think it's a very interesting question, and we initially had a discussion on this as well. As you all know, Bangladesh angel investments, right? This is a very new concept, and we are the first structured organization to mobilize a community of angel investors in the country, right? Before us, it was unstructured deals, and also a lot of distinction was not being made under definitions of impact enterprises, SMEs, and startups, which we now have, right? But at the same time, when we started out to where we are right now, I think the problem still remains in the same place, which is on capacity, right? Capacity development of angel investors to understand or even take consideration of impact, because from their lens, it's more of like Vineet was mentioning, right? The investment itself is an impact investment because they're doing a portfolio theory, and at the end of the day, few companies will not be in the portfolio when the entire fund matures, and the return that they're expecting is commercial, but at the same time above commercial to sort of offset that risk appetite, because they're coming in very early stage, like you mentioned. So I would say in terms of approaching investments, they look into the investment commercial sides first, and then the room for growth is in the area of understanding how to actually measure and also cater to integrated ways, like Sebastian was saying, to look at impact indicators and categories. So which is where I think a lot of work has to be done. Biniyog Bridhi sets a really good example in catering to impact management skill sets and tools for, I would say, early stage enterprises, but not on the investor side. But there needs to be some coaching, some mentorship, some advocacy there. And we have been mobilizing our resources to sort of understand or sort of cater to the needs of angel investing first, because that itself is a concept, is very early in Bangladesh as we speak, right? So I think, yeah, in terms of those, matrices, I think the challenges do exist.
No, thank you. You actually mentioned a very key point, that's measurement of impact. So with that point, I would like to come to Sarawat Apu, that you have been in this impact investment scene with True Value. So I would like to hear about your experience regarding impact mapping and measurement, and at the same time channeling it towards the right investment. What is your experience so far?
Okay, thank you, Irad. So basically, we have our own impact measurement and management framework. And I think this is very important because at the beginning of any impact investing, even at the due diligence phase, we should have the right framework in mind so that we know whether this investment is going to work or not. So basically, there are two frameworks that we follow. One is SDGs, that which SDGs will this investment, if we invest, or which SDGs will this startup or this enterprise address. The second is that the IRIS framework. So IRIS framework of impact investment. So we basically use a combination of these two, and we have our own framework. And I think the impact reporting framework or impact measurement framework is also important for the investors, actual fund investors. Because impact is not a one-off thing, that okay, this impact enterprise is making some impact and I'm making an investment. No, so this impact has to be sustainable. It is an ongoing thing. So every year, like, we have to do an impact reporting to our fund investor along with the usual fund reporting. And the most important thing that with impact measurement, what you can do is you can avoid impact washing. So impact washing is a very dangerous thing. So with the proper impact measurement and impact reporting, you can avoid impact washing. So this is why.
This is very critical. Could you, Abu, could you care to highlight a little bit more about what is impact washing?
Sure. Impact washing is something that you give an impression, say an impact enterprises say that, okay, we are addressing the bottom of the pyramid people, and we are addressing their needs. Say we have farmers in our value chain. So it's an impact enterprise that works with farmers. But maybe when an investor, further probes, the investor may find that there may be traceability issues. So traceability is a very big problem, particularly as an agri-sector impact investor. That's a big problem that we are facing. Or someone may say that we are addressing the health issue, but how? How is it measurable? How do you measure that you are addressing an improvement in health of the low-income people? So that is why measurement is very important, because many enterprises may come to you and say that we are addressing this issue, we are addressing environmental issue, we are addressing health issue. So that is why exact measurable impact is very important.
Right, right. So before an investor gets into an impact investment, they should clearly have an understanding about what type of framework they're following. That's number one. Number two, they need to look into what they're actually mapping as an impact, because there are multiple, even in a sector, there are multiple indicators. So what are they actually going to map? So after that comes the reporting part. So there are three things. So what we're seeing, there are three things in it, but at the same time, like Bijon Bhai said, like you are saying, that there are multiple sectors, there are multiple indicators where the impact investments can be done, measured, and reported. So if we look into the demography of Bangladesh, the demographic dividends that we are trying to reap, so from that point of view, I will like to come back to Dr. Samsuddin, that sir, that from our policy point of view, and the regulatory point of view, how are we looking this to protect the impact investors in future, so that they are not face the damage of impact washing? Because we as a country, we are quite rich in the demographic numbers. So how can policy help us there so that the investors can pave a better road in Bangladesh?
Thank you for this question, and for some of this thing has already been mentioned. I would like to give an information which I think can help understand this thing. We recently have taken an initiative to overcome this particular problem of how to measure and how to report this. One of the primary operational level problem of impact financing in Bangladesh is the lack of having any kind of taxonomy. We don't have any taxonomy of how to measure, how to differentiate between really impacting or washing or doing nothing and doing kind of thing. So we are building that. We have already taken initiative, and we are working with even DP and IFC in developing this thing. And I think in a very short period of time, we have a formal impact assessment taxonomy, which will be very important, which will also provide this reporting requirement, because the European reporting system has already, its Rule 8 and 9 has required for this kind of reporting in their countries. But it's new issue, so we are yet to take those kind of thing right away. But in the coming days, that will be very much required, because globally, all the companies will have to actually address this issue of green and blue and all this kind of issues. So we are developing taxonomy for that. With this demographic dividend, in fact, our young people are really enthusiastic, and they have done wonderful job. For example, during the COVID period, about 700 plus new startup has gone up, was innovated. Many of these things are not visible in many cases, but 700 plus startup actually came during the COVID period. So they have the ability, and that needs to be matched. So match is very important. The match means that, there are crude money is available, but how to connect these two parties? I mean, who want finance and who wants to finance? There are some wonderful models. For example, there can be monthly or quarterly town hall meeting, like, having the business model provided by those who wants finance. They come, and some party, maybe a government party, maybe I can, if they want, or if you want, or Startup Bangladesh can actually better do it. I mean, they can arrange these young people come up with these ideas, and they have the information what ideas they're coming up with, so they know who can come and facilitate that particular initiative, because they might have an interest into it, like an angel investor or venture capital, and they can connect them and discuss. And then there can be government agencies who also need to be part of it. For example, that new startup idea might require some licensing, some approval, and these parties can come and can actually tell that we are here to help you. So I mean, putting these two groups together, maybe probably preferably through smart Startup Bangladesh or like us. We don't know with a small amount of money, but Startup Bangladesh can very well do with small amount of money. Whatever the authority, but this matchmaking is very important. That is actually missing. We are doing this campaign. It's a wonderful campaign that we have been doing here, and we must appreciate our Honorable Prime Minister in opening up this startup idea in this particular place. And we have to pick it up, because there is once again, the policy and the initiative and the encouragement are there. Now, operational thing has to be fixed and delivered, and thereby this demographic dividend can be achieved.
Right. Thank you, sir. Wise words. But picking up from you about the connectivity, I would like to come to Bijon Bhai about the current venture capitals and the concept of impact investment. Can they connect, or are they very different?
Thanks, and that is something I think we were also discussing on the previous panel as well, right? I think increasingly the world is becoming gray, right? It used to be more black and white before, right? So previously, for example, there was mainstream philanthropy, right? And there was mainstream commercial organization, right, for profit, right? But if you look at most organizations now, I think they have moved away from that narrative. It's a lot of centralization, right? I mean, yes, an organization exists, but they also exist to create impact. And now with advancement in technology and everything, they're also being able to measure and manage that impact as well, right? I think a lot of the investors who are on the more for-profit, I think there is increasingly becoming this push to also look at different, not fully impact, but different ideas of impact. So I think it's like a spectrum, right? So there are some investors I personally know who are very, very commercial in nature, but they also, when they look at the startups, they look at least what SDG indicators you're measuring and touching, right? Maybe it's not a full-blown impact investment thesis, but it's still something is there, right? So I think increasingly the world of the future would be gray. Organizations would not simply say, I'm going to make a lot of money. They're going to say, we are going to make a lot of money, but we're also going to change the world, create sustainable impact, right? And I think that the future is more conversion of around that. We, of course, have to be careful around impact washing, but I think the future is gray, and there can be overlaps areas where both commercial investors, impact enterprises can work together. Yeah.
Nice. Thank you. My last but very quick question to Sarwatapa and Zawad, both of you, that I'll come to Sarwatapa first, that as an impact investor, what you need to be aware of or watch out first before making that impact investment decision?
I have already covered this a bit. So the most important thing I need to watch out is basically the intention of the entrepreneur to continue this impact, to make this impact sustainable, that it's not a one-off thing just to raise impact investment, that see I'm making impact today, but this impact has to continue even after we exit the investment. So that mindset, and also whether this impact can be scalable. So that is these are the two most important things that we look into.
Zawad?
I'll come to this, statement I say all the time is we look at problems, right? A large problem that can be solved for the masses. And usually what is paired to it is a couple of things, right? One is a unique insight to solving that problem, and the expertise that team brings in, and thinking about the insight that they're proposing, right, is a combination of a vicious cycle, right? So if you are a very good problem solver, have a very good domain expertise to solve a very big problem, then everything else comes in, fits in later on, whether it's pitching it to a VC or a private equity investor or an impact fund manager, right? There is different mandates for everyone. We want to go into a world that is more integrated in the future, but at this point in time, the allocation strategies of fund managers are very crystal clear, right? So we need to be very sure that what we are trying to do, right? So the only commonality that we have found in pitch decks or evaluating companies that come to us is how unique is the problem set, and who are solving those problem sets given the unique insights that they have gathered during their experiences over the last years. So that is something that we want entrepreneurs, whether they're impact enterprises, SMEs, right, or even technology startups, who are, again, you can talk about integrated bottom lines, double bottom lines. I can also talk about top lines, right, double top lines with impact and growth together. But again, at the same time, it's about solving that critical problem for the masses first.
Thank you. Thank you. My last question of today's session will be to our esteemed Dr. Samsuddin sir, that quick 3 points for any impact investors who wants to invest in Bangladesh. 3 points any impact investor should keep in mind.
The first thing that we have to be very honest about how we are thinking about that thing. For example, we have approved a number of bonds for NGOs like BRAC and Sajeda Foundation and all. These are, for example, green bonds. So it's supposed to have some impact. And at the very micro level, these funds are channeled. So we need to ensure, and I'm sure they are gonna make it ensure that the fund availer, those who are getting the fund, are using it rightly. So anybody, because it really has an impact on all of us. So interest is very important to be taken. And sometimes these interests are misunderstood as well. That needs to be addressed as well, because the explanation provided by the idea, the person who is carrying the idea, may not be understood. So that also needs to be addressed. Second thing, there might be some bottlenecks while they are operating, and they need to make sure that those things are identified. There cannot be any better thing to do than maintaining a better book of accounts. So if they really want to progress with their startup and become a larger company over time, so the second thing they must do is to ensure that their books of accounts are always correct and appropriate, so that all the stakeholders can actually see and feel comfortable with the transparency. And the third thing is, whenever they have a problem, they should not just let it go, or just avoid it, or ignore it, or accept it, or adapt it. They must ring the bell and tell someone somewhere, somebody is there, and bring the information to those who can address. And then their problems can be resolved. So I think three things: they must be honest, they must keep their books and other things always transparent, and they should not I think keep silent when they have an issue, because I think any problem is actually is solvable. There is no reason to just forget about it. Thank you.
Thank you. Thank you so much. So that was it from our side about the impact investment and its headways in Bangladesh. So if this 21st century was a coin, I think its one side is the fourth industrial revolution, which is going to bring hyper growth for us. And the other side of that coin is going to be impact investment, which is going to bring sustainability for us. So with this, I would like to draw a conclusion to our panel discussion. You guys have been a fabulous crowd. Thank you. Thank you, everyone.